Testing, testing, 1, 2, 3, testing, testing, 1, 2, 3. Good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 175 for Monday, 3rd of March, 2025. I hope you're all well. I hope you've had a good weekend, enjoying the rather eventful procession that we've gone through over the last few days, more of which later as we dig into our session today. Just to start off, just to confirm that technology is working well for us. For those of you who are in the room, or if you're watching on YouTube, if you can just confirm that you can see the slides and hear my voice, that would be a great start. For those of you joining us for the first time, the Monday Market Update, it is just that, okay? It is me flying through as much as I can cover in the next 30 minutes, looking at the strength and weakness within FX indices and commodities markets. We'll then have a look at a few charts of interest, and then we'll finish up with a look at the live market itself. So always plenty for us to talk about, always plenty for us to cover here. As always, you're always very welcome, but just always remember that you are responsible for your own trading decisions. It was great to be at the London Trader Show on Friday. I got to meet a few of you and put sort of names to faces, and thanks to all of those who came to my talks and came and had a chat with me afterwards. It was really, as I say, great to speak and meet with other traders. One of the sessions that I did on Friday was about how to trade 3-bar reversals, and if you want to see that again, I'll be repeating it here at 2 o'clock London time for active trades as part of the Monday Market Matters webinars. So you can register for that on the Active Trades website, or the QR code is there if you want to join us to go over what I covered on Friday. If you want more of a kind of broad weekly update, then I'm providing one for Admiral Markets on Wednesday evening at 7 o'clock London time. Once again, you can either register for it and get the details on their website, or use that QR code there to take you to the site. Okay, let's dig into the main thrust, the main element of our piece here. So I appreciate if you are new to trading, or if you're new to joining us, you might find this maybe a little bit overwhelming or intimidating. All it is just parts taken out of my own model that I work on the weekend. Okay, so I use a model that I call the STAM, which is all about identifying where's the strength, the trend, and the momentum within primarily FX markets, but then also indices and commodities markets, because that's what helps me effectively sort of allocate my time, energy, and resources for the week ahead. So what is this telling us, and actually how do we utilize it to help us? So here we are. We're into the 10th week of the year already, okay, starting the 3rd of March. Where's the strength and where's the weakness? Well, we start with, Japanese yen still top of the pile. Okay, not really a surprise there. We can see that for pretty much most of this year. Okay, Japanese yen has been in the top. A lot of that to do with sort of Japanese yen looking to raise interest rates when the rest of the Western world is looking to cut those rates. So not unsurprising that we see Japanese yen at the top of the pile, and there's also probably an element of some sort of risk-off sentiment as well changing. I'm going to look at that at the moment. We're going to look at the monthly charts as when we switch across to live markets. But we have Japanese yen as top of the pile, and along with it is sterling. Okay, so as I said, sterling had kind of bumped its way back to the top, but more due to the weakness in US dollar. Okay, more so than any inherent strength in sterling. But of course, the last week, Mr. Starmer has been doing his best to do a bit of grandstanding there. Okay, to make himself look like an international statesman, all right, and certainly even this morning, as you can see, after the sort of events of the last, let's say, sort of 3 days, And we can see what's happened is that euro sterling, pretty much everything has risen against the US dollar. We're going to get more into that in a moment when we look at some of the charts of interest. But what we can see is that basically sterling, it can remain at the top of the pile. And at the bottom, what we have is the Comdols, all right? So the Comdols, okay, look at that. Aussie at 7th, Kiwi at 8th, Canadian dollar at 6th, okay? So invariably, remember, Comdols are normally an indication of a risk on sentiment. So if they're at the bottom of the STAM pile, okay, that's giving you, and Japanese yen is at the top, that is giving you a little bit of insight into this sort of underlying sentiment within markets. And what we did see was US dollar at the end of the week, okay, on the data we had was strengthening back again, but that has kind of reversed as we went into the start of this week. We can see that we'll look at that, the US dollar against the majors in a few moments. Swiss franc, fair to middling. Euro has strengthened, okay, as you can see from being bottom of the pile the previous week. But once again, a lot of that strength is to do with effectively the sort of events over the weekend. All right, we now have after the, let's say, the tete-a-tete in the sort of in the White House on Friday, we've now had the Europeans sort of finally deciding to stand up and do something about it. As I said, Mr. Starmer's been grandstanding about and announcing a sort of an order for about, I think there's about $1.5 billion of air defence missiles, etc., to be built in the Thales plant in Belfast. I'm going to come on to that in a moment as well. But we've also seen the Europeans coming out talking about how they're going to effectively sort of look to spend, I think it was like 400 billion on defence, and then I think another 400 billion on infrastructure. Lots of big numbers getting bounded about. Actually, how much of it we see sort of going into the places where it should be is, as a moot point, all right? But that might be just me being a bit of a cynical old sod. We'll have to wait and see how that particularly plays out. But all of that is having an impact. And when I look at the individual currencies, what I'm interested in there is sterling. There's a lot of STAM environments there, okay? Apart from a selling environment against the yen, it's pretty much in a buying environment against pretty much everything. And that's a reflection of, as I said, basically, flows into sterling. What you might want to do if you want to have a little look at the gilts and yields, especially on the European side, okay? They have been fluctuating quite widely. And that in itself has an impact on currencies, the currencies as well. Interestingly, when we start to broaden that out to look at some of the indices and commodities, what we have seen is, what we're looking at now is, for me, NASDAQ is a tactical short, Russell is a strategic short based upon the STAM. But, from a couple of weeks ago when all of these American indices were in strategic buying environments, the picture has changed. Not only that, of course, Saturday was the first of the month, so I do all my monthly analysis, sort of my monthly charts to take my monthly move trades, and we're going to look at it in a moment, okay, to look at actually how the monthly charts are looking on these US indices, because I wouldn't exactly say they're filling me with glee, but more of that later. We can see that Nikkei remains a strategic buy, a strategic sell. Sorry, Aussie's gone tactical sell. Oil remains a strategic sell. Gold is a bit mixed, but we're going to look at that in a moment. Silver remains a kind of strategic buy, but the price action, okay, certainly at the end of last week, wouldn't have followed through on that. Bitcoin, okay, was strategic short, but Bitcoin had a rather interesting weekend as well, didn't it? And maybe we'll have a look at that if we've got time there. VIX was tickling the soft underside of 20 at the end of last week, okay, just looking to see where that is going. And interestingly, VIX for a while has actually been, indicating being bearish on stocks for a while, but it hasn't had the volatility to it. But, as I said, the picture is changing, and we'll look at that more in a moment. So lots going on, lots in flux, okay? Certainly this morning, was some really good trades this morning, getting intraday on sort of being long sterling, okay? That was the joy, and if we've got time, well, we always finish on sterling. We'll have a little look at that. But yeah, probably dollar has been the sort of, let's say, the biggest loser at the start of this week. And if we look at some of the charts of interest now, we'll start to get an idea of what's kind of driving all of that interest at the moment. Okay, so here we are. Let's have a look at the charts of interest. So this is where I put up just 3 or 4 charts that you might want to add to your watch list. Okay, you might just want to see how they particularly play out. Last week, okay, those of you who join us on a regular basis, we talked about I talked about quite a few defense stocks last week, okay, and looked at them. We looked at Rheinmetall and Leonardo, and I said how they were last week they were galloping away, okay, and that has continued based upon the sort of events of the weekend. So Rheinmetall this week have been up. I think they started this week up about 17% at one point. I think they're up about 12% at the moment. Leonardo are up about 12%. But you can also see like Thales, the French one, they're up 12%. But this is British Aerospace Systems, okay, here. And, this is a weekly chart, okay. Fabulous uptrend as it has been for most of the last couple of years. But then we were, I was talking about how we were in a little bit of a sideways block between about 1,200 and 1,400. But you can see, how we've started, okay, this week. And I find this fascinating. All right. I find this fascinating because, of course, what's happening is this is sentiment. This is people buying into defense stocks based upon, Europe now deciding that, it's been searching around, and not only has it found its money, but apparently it's also found its backbone. I remain to be convinced on both, but, as I said, that just might be me being a cynical old sod about that. But, what we can see is that and as I said earlier, I think the Germans are coming out sort of saying they're going to spend 400 billion plus, and a load of the other European countries. That is all well and good, and politicians love it. They get to grandstand, they get to stand about. The same Mr. Starmer, who has been, hammering home Rachel Reeves' message that we had a 22 billion black hole, and but we had to give 18 billion to Chagos Islands. We couldn't afford anything else. Suddenly manages to start pulling out the money when there's some, when the kind of war drums start. The kind of interesting thing about this, as I said, is there's a couple of things, but one of the big things is that even though European Union last year had up to 326 billion euros its defence spending, 80% of it was still spent outside of Europe because Europeans, we allowed our production capacity to wither. Production capacity is not something you just turn on overnight. So, for example, I read a piece at the weekend, a new sort of armored fighting vehicle that the UK is buying, Boxer. It takes about 27 days to build a Boxer. Okay, it's like an armored fighting vehicle. The thing is, everyone looks at that and says, "Oh, that's great. We can build some in 27 days." What they missed out is that it takes 18 months in lead line to get all the parts together to actually to build these vehicles, and that is just an armored truck, really. When you start looking at some of the other pieces, okay, as I said, the kind of turnaround in terms of being able to actually buy these things and see them on the front line and make a difference, could be years away. All right. And furthermore, as I said, if 80% of the money is still being spent outside of Europe, well, then who else are you buying it from? The Finns maybe do a bit. Okay, the Turks do a bit with the drones. Okay, the Koreans do a bit shipbuilding. Japanese do a bit, but the vast majority is you're going to be buying from American defense companies. So European defence companies have bumped, while American defence companies have rolled over. But actually, the vast majority of that money is still, for the next couple of years at least, is still going to be going to American defence companies because there's nobody else, right? There is nobody else to buy it from. I suppose for those of you who have taken interest in what this probably has done is this has probably secured the Tempest next generation fighter aircraft, which was a UK, I think is it UK and Italy, and perhaps the Japanese, UK, Italy, and Japanese in. So invariably, what we're going to see is that we're going to see Europeans making decisions based upon politics rather than best kit. But then you might say it's always been that way. But invariably, it doesn't bother British Aerospace. You can see that's jumped there, right? That's just the start. Now, of course, that's the start of this week. We can see that that's a big gap. All right, that is a big gap, and as usual, gaps tend to fill. And so I'll be interested to see do we basically once once the rhetoric and the enthusiasm wanes, do we actually sort of come back and fill the gap before we start to trudge our way north? That's what I'd be particularly looking when it comes to British Aerospace. And it's a pretty similar picture. This is SAAB, okay, Swedish defence manufacturer. Most people sort of remember them for their cars, but actually they used to make some. Well, in fact, they still do make some great fast jet aircraft. Okay, for me, a child of the 80s, the Viggen, okay, was a great SAAB fighter jet, and now they have the Gripen, and they build a whole host of other stuff. Okay, but as you can see, all right, it had been in a pretty good uptrend That's what we'd seen. Pretty good uptrend. Have been kind of fair to middling, all right, for a while. And you've heard me say this before. Every time the defence companies look like they're about to roll over, suddenly there's a crisis, and boom, here's what we get. Here's what we get is a great move. Look at that, and you can see that's been coming over the last couple of weeks as Europe finally wakes up, all right, to what's required from it. So in many ways, whether you love or loathe Trump, he has got the result he wanted. Namely, even in his first term, he had wanted Europe to step up and stop mincing around and actually take defence seriously, so that he can effectively, use his money better and effectively, confirm his pivot towards the Pacific. And in upsetting all the Europeans, he's managed to actually get what he wants, namely that the Europeans have finally sort of been awoken from their slumber, and are very, very happy and very, very glad to keep continuing Mr. Zelensky's war in Ukraine, because it means if he's doing the fighting, that means the Europeans don't have to. So that pleases them. But there you go. Look at that as a trade. You can see that's popped up, and we've got gaps there, and we still haven't filled this gap. We've started, we've included this week a gap. As I said, I would not surprise me if we come back and fill that gap pretty quickly. This one could take some time to fill, but it'll be an area I'd be watching on the chart. And another, kind of less known defense company, QinetiQ. So I probably should sort of, in the interests of transparency, disclose that I've still quite a few friends working in defense companies, and in particular ones that are associated with QinetiQ. QinetiQ kind of came out of, I think it used to be called the DRA, the Defense Research Agency. I'm sure there's somebody who knows the kind of the lingos, the three-letter acronyms better than me these days, but you can see, what we're interested in here is that, having been in a kind of fair to middling, as I said, sort of between 300 and 380 for a good while, we broke out. I look at that as a kind of a bit of a rounded top there, okay, a little bit of rounded top, almost like an inverse cup and handle. But we were dropping our way down, and we were coming right back down to the weekly 200 period moving average. But you can see the last couple of weeks has just bumped QinetiQ up there from 360 to trading around 440. So as my friends, I'm probably overstepping the mark, but quite a few of my friends, they work in defence and they hate Trump, and they haven't taken kindly to my commentary that as much as they hate Trump, he's basically just secured their jobs for the next 5 to 10 years. He's the one who's actually putting their daughters through university, and that was kind of met with a lot of grisly faces from my friends and stuff. But that's the real politic of it all. But as I said, for me, QinetiQ, it's a gap here with the moving averages. Looking at it as a trade, I'd be kind of looking for it to come back down into this area to fill. And then for me, that becomes a decision point. Look where those moving averages are. Come down, fill. Does it actually genuinely have, the kind of the oomph to carry on up towards 500 pence? Or are we just going to now start to see kind of 400 pence as a kind of a line in the sand? And does it now turn from being resistance into support and hold itself there? Final one, I didn't want to do all defense. Final one is Costco, all right, okay? So, I've won 15 minutes from here, okay? And my friends and family all love it, all right? And, I've often said that basically, you want to be looking to buying it and investing in stuff that you and your friends use. Okay, then you always want to just keep aware of your people's buying habits, and you can see Costco. That's a beautiful chart, all right, and there's a beautiful weekly chart, okay, and they're all along the way. The 20 period moving average has acted as really nice support, hasn't it? Really nice support. We talked about it a couple of weeks ago. I think we're looking at it kind of like as buy opportunities. But what we've gone through, as you can see, we're through $1,000, and now that could be a nice. And look at that as a nice bull flag. They are, I think they've got their earnings on Thursday, I think this week. But I wonder if maybe we'll see sort of a drift towards 1,000, and then will that act as that kind of base if there are good numbers up and stuff. So as I said, that's been a great trend. Okay, in that and I tell the new traders, basically. new traders, your job is to sort of just take a piece out of a good trend, all right? Don't fight good trends like this, okay? It's pointless. What you want to do is find a good trend and then find a way to take a piece of it, okay? The challenge you've got is that things don't trend. They only trend 20 to 30% of the time. That's the challenge we have. But as I said, towards the end of this week, let's see how that particularly plays out, and let's see what the kind of the numbers are, and whether those numbers are enough to give it another shove higher, if not at least back to 1,075, the kind of recent high. The only thing that kind of worries me about it is looking at the overall US indexes, and that's what we're going to do now. So there's some charts of interest, add them to your watch list, see how they play out over the next couple of weeks. And if you want to just bear with me one moment, what we're going to do is we're going to switch across to the live markets and have a look at what that's telling us. So just bear with me one moment. Okay, so I hope that you can still hear me. Hope that you can now see the charts. For those of you who are new or joining us, this is just kind of mostly an indices and commodities profile that I have. So what have I got here? I've got the Dow here, the NASDAQ, SP 500, the Russell, the FTSE, the Nikkei, the DAX, and there's also oil, West Texas. Okay, so I alluded earlier to what I was kind of interested in. Now, let's just bring up the drawing tool. So as I said, this is the Dow on the monthly candle. Last month's monthly candle it's a little bit of, I would call that a little bit. It's an inside bar doji, bearish close, a little bit of indecision. That's what I'd be looking at there. Look at that over the last couple of months. All right, really effectively we've been going sideways. Then I go on to the NASDAQ, look at, last month's monthly candle. For me, that is a bearish pin bar. Okay, it's a rejection candle. If I look at the S&P 500, last month's candle, that is it's a bearish rejection candle. Okay, bearish candle, and then also Russell. Okay, Russell here, that to me that's already peaked, and this is actually just I would call that kind of like a domino candle. It's a bearish momentum candle. Okay, in the sense that it has tried to push higher and it has just been pushed down and it closed. All right, it closed low. It's closed low in the last few months. Okay, none of those to me are terribly bullish signals. Okay, now of course it's a monthly. It's a monthly candle. Okay. But when you see all four of the American indexes, look like that, it does start to give me a bit of a heads up. All right, so I think we might well be in for a very volatile month, ladies and gentlemen. I mean, it's already started with the kind of like the Ukraine element, but I will also be interested to see, what is the sentiment, okay, with American investors and traders this next month. I wonder if we're going to have a little bit of a bit of March madness, which is reflection on some of the I think it's American college basketball. I'm sure some of our American viewers can educate me quite happily on that. All right, but I think we're in for a little bit of March madness. Okay, so it might be a case to sort of buckle up and see what this month has in store for us. So don't say I didn't warn you. Closer to before we get closer to home, with that Nikkei Japanese index, okay, that also had a bearish month there. Now, of course, yen has been strong. So with the flip side of that, no surprise really to see that we've seen that kind of the kind of weakness in the Nikkei. Look at the DAX. The DAX in the monthly continues to push away. Even does the FTSE. Okay, I was intrigued on the FTSE in terms of some of the daily and weekly closes, but it's good how it's good how the war drums always give always bring a little bit of volatility. Okay, it always provides a nice little distraction for people, doesn't it? So I suspect what we've seen is, for example, in the case of the FTSE's been lumped higher today off the back of things like British Aerospace and probably a couple of the defence companies there, but whether that will hold, we shall wait and see, ladies and gentlemen. Right, so we shall wait and see that. If I look at some of the other commodities, gold, I was intrigued because gold last week we talked about it, how the kind of the talk about the continuing the war in Ukraine had, even though we'd had a rejection candle at 2,900 last week, or the week before last week, pushed still tried to push higher, but then last week. Look at that. That's a bearish engulfing candle. That's a bearish key reversal candle. As I said on the daily chart, I've already started to see this double top here, okay, with a bearish key reversal, but a ground because of the uncertainty of the war. But just look at that there, okay. It's just starting to sort of drift off now. You might say, Paul, if there's so much uncertainty, why is shouldn't gold be ratcheting higher? And that is a distinct possibility. But what you find is if funds and banks get themselves in trouble, well, then actually they have to close their best positions first to make sure they don't get margin called. And maybe this is an element. I don't know. We shall see. But certainly that weekly chart, okay, there. There's a bit of a top there, okay. It might just be a temporary top. It's one swallow doesn't make a summer, but certainly, based upon what we're seeing everywhere else, that's something. It's cause for concern. Silver, with that, as I said, even though silver remains a strategic buy, last week I was short on silver technical. There, okay, basically nice inside bar, pin bar, and we rolled away over, but bang. Here we had a nice, but look at that, we're having a nice bounce off that. Silver, unlike, well, whilst people buy gold to hoard, silver actually has a real value, real use, especially in manufacturing and industrial elements. And so it wouldn't surprise me that all this war talk is basically given silver a bit of a bump. As I said, Bitcoin. We talked about Bitcoin. Here we go. We talked about Bitcoin for a while, and I've been saying about how it being all indecision, sat above that shelf at around about 92. And actually, if we go down to the daily, last week, we were just beautifully caught between 92 and that daily 15. We dropped our way down to it. We were at the 200, and then, with all the talk about war, what Trump also announced is a strategic Bitcoin reserve, okay, and that basically gave that was the hallelujah trade from for all the Bitcoin people who at the end of last week were starting to get a little bit panicky. Suddenly that has bailed them out. But interestingly, it's back up to this kind of ledge 93,000. Okay, so let's see how that particularly plays out over the next couple of days and weeks. All right, see what we get there. Appreciate. I might overrun just a little bit today, but that's because we're just covering so much. I'm just going to do dollar and then we'll do sterling, okay, in terms of the FX pairs. As I said, I've talked an awful lot about, well, the big picture with the STAM and also some of those charts of interest because, well, it's not every day, you get a whole host of stocks just basically shooting up, 10 to 12 to 15%. Okay, that's the way that that particularly plays out. All right, so this is my dollar index, okay? My dollar index profile. So we've got dollar index, dollar Swiss, pound dollar, euro dollar, Aussie dollar, Kiwi dollar, dollar Canadian, and dollar Japanese yen. So that's what I've got there to give me a snapshot on the dollar. Even though I particularly like to trade in sterling, I still start with the dollar to give me an indication. Now we've had a kind of a mixed bag, okay, the last couple of weeks, which we've talked about, but let's just go straight to the dollar index here, okay? Dollar index weekly chart. I talked about it a few weeks ago how we hit the big round number of 110, and then we had an indecision, and then we literally, had worked our way a little bit lower. This is a lower high. We pushed away lower, but then interestingly, last week we printed, what looked like it is, it's a bullish engulfing candle, it's a bullish key reversal candle there, okay, and that was off the data, okay, of Friday afternoon's data. But then actually, if I go down to the hourly chart, even there we go. So, we basically this is Friday. This is the hourly chart for Friday afternoon. Okay, we had a bump up, and then invariably, that was a kind of sort of that's the start of that kind of little the White House tete-a-tete, and then you can see how it's played out. In the end, gapped down, beautiful PO20, and then basically, followed its way down there. Okay, and so we have seen that sort of start to that kind of dollar weakness there. So I think this week, I think we'll just trade about in there at the moment. Okay, remember, everybody's talking about war, but the reality is there's still some big news data coming out. Okay, this week we've got on Thursday, you've got the ECB right there looking to cut European interest rates again, and then we've got ADP non-farm on Wednesday, and also the real non-farm payrolls on Friday themselves. If you look at euro dollar, having sold off drastically, I would say this is like a really not particularly pretty, but then what you want and what you get in markets, are always different. Looking at that as a case of, is that a double bottom there? Is this just a bit of a kind of coiling up here? Certainly I was interested, the week before last we had an inside bar, pin bar, but you can see for yourself, last week was just, bearish engulfing candle there, not a particularly pretty one at it. And I think what we're seeing there is, this is the daily chart, okay? We sold off at the end of last week, but look at that's today's action. Let's go down to the 1 hour chart. Remember, this is the euro dollar's pretty much, inverse of the dollar index, okay? So 1 hour chart, that was the start of Friday afternoon session, dollar strength, euro weakness, and then of course it turns around, we gap up, all right? Come back down, try to fill a bit of that gap before we've gone off there, okay, bush, as you can see. That's kind of dollar weakness and a little bit of, let's say, euro cheerleading, but let's see how long that lasts for. As I say, one swallow doesn't make a sum, and that's what we've got to kind of particularly contend with. So dollar is starting the week on the back foot, okay? We're starting the week on the back foot, and as I said, a lot of that is just to do with political rhetoric and sentiment. As the week goes on, let's see how that particularly plays out. Okay, I'm going to switch to sterling here now. Sterling, all right. So this is my sterling profile here. Bang, and cable, euro sterling, pound Aussie, pound Canadian, FTSE, pound New Zealand dollar, pound Swiss, pound yen, and I have them all set up like this so I can get a quick snapshot, and you can see what's been going on. This is the 30-minute intraday charts this morning. Okay, I had a couple of little shorts there. Okay, just to start the day off, but as you can see, around about 9 o'clock, clearly there's something got done. All right, Mr. Starmer got paid for basically beating the drums of war. But as I said, that could be just me being a cynical old sod again. But you can see that has just brought out some sterling strength there. Okay, that's the way it's gone. If I look on a bigger picture, that's what we want to focus on. Let's just switch these over to the weeklies. What we're seeing is, what I was intrigued was last week. Here we go, cable, having sort of worked our way back up above 125, we'd run up towards the 50, and we'd actually printed, I was interested in this kind of bearish pinball there, okay, at the 20. I wondered if we were going to get a drift down to 125 on a tactical level. But as you can see, whilst it started that bang today, it's just been dollar weakness all across the board, okay? Dollar weakness and clearly some sterling strength there. That's what's played out. That's what's played out there. Interestingly, pound against Japanese yen, all right, even where we've seen really for the last couple of months pound working lower and yen strengthening because yen's top of the pile, you can see that we talked about it a bit last week, is that we were forming a higher low here and then bosh. You can see how we've just larruped it. We've just hit it out of the park, okay, for sterling longs, all right, off the back of that. Even my perennial pound against Swiss, which keeps me grumpy, look at that. We are breaking above that kind of 114. Now this is a weekly candle, and we're only half a day into the start of the week, so let's not get too excited. But nevertheless, you can see what the sentiment is, can't you? There is bullish sterling sentiment there. That's what we're seeing there. Okay, that's hopefully you're all able to sort of work out the to see which way it's flowing there. Okay, and certainly as you can see against those condols, the condols are getting battered. If we look even against euro against sterling, okay, last week we sold off. We're back down to these 82.52 lows. Okay, the daily chart is just working its way down there. And interestingly, if I go there, we kind of sold off, at the end of the week, and then we gapped up, but then even that has just kind of working its way down there, giving a little bit of sterling strength, euro weakness. But I think the fact that, for me, if you just look at that block from this day, the fact that it is just in a very small, 82.50 to 82.53 to 82.66, to like a 13, 14 pip block, that is probably a sign for me of an element of balance between euro and sterling. They're both strong, right? They're both strong at the moment, and now it'll be a case of who says what next. That is what will have the biggest impact on the future direction of the euro against the sterling. Okay, there you go, ladies and gentlemen. Let's draw it to a close there, okay? And I appreciate I overran just a little bit, okay? And but lots to share with you, okay? There, and I hope you found that useful. Daniel says, "Thanks, Paul. Sorry, I have to go. Really enjoyed your presentation to the London Trader Show. Thanks again, Dan. Yeah, no, it's great to meet you, Dan. As I said, great to see those of you who did, okay, and came up and had a chat with me, okay? Thanks for your feedback. It's always much appreciated." For those of you, okay, on the VTP, there will be the stage 1 call tonight, the stage 2 call tomorrow. As I said, I'm rerunning the 3-bar reversal at 2 o'clock today, and then Wednesday evening will be the sort of kind of weekly global outlook. I hope you all have a fabulous trading week, ladies and gentlemen. Okay, make sure to manage risk in these volatile times, and undoubtedly, I will speak to you soon. Take care, everybody. Cheers.